Today, we saw gold come crashing lower. Then after the bell, Netflix, yikes, our stocks the next shoe to drop. Now, we're going to look at how the indices fared across the board today. The Dow was up 218 points. Nasdaq down 36 points. S&P 500 up 0.22, with the Russell 2000 being down 1.2. Now, we come over and look at advancing issues versus declining. We barely had more percent of issues advancing on the day at 49.4% of issues. However, when we come over and look at the sectors across the board, notice today we only had 3 sectors in the green: consumer cyclicals, industrials, and healthcare. Every other sector was in the red. The one leading the charge to the downside was basic materials, which is really no surprise given the massive drop we saw out there in gold. We're going to start seeing headlines all over the place like this. Gold logs its biggest one-day sell-off in years. Is it a bump in the road, or have prices topped out? And that's a question for you guys real quick. Do you guys think gold has finally put the top in, or is there a lot further to go? We come over real quick and we take a look at the weekly chart. I want to bring this to your attention. I've talked about this during the live streams and in the past, but we've had 1, 2, 3, 4, 5, 6, 7, 8, 9 consecutive weeks up in a row. So it's really no surprise we're starting to get a pullback at this moment. Now, if we scroll back down memory lane real quick and we go back to the last time that this has occurred, I want to bring this to your attention. Last time this occurred was back in 2006. And look, right here, we had 9 consecutive up days, and look how deep the retracement was on the way back down. Are we just now starting to get a candle that looks like this? And we're about to see a several week correction that then maybe pulls gold down to some of these key Fibonacci retracement levels. The first stop would be the 38% retracement at about 3,999. But more importantly, I really want to watch somewhere between the 50 and 61.8 Fibonacci levels. The 58% level comes in about 3,875, with the 61.8 level coming in at 3,752. Now, when we come over and look at some of the gamma levels real quick, notice to the downside, notice where they're calling put support is all the way down here at 3,800. When we come back and look at that gold chart, that would put us right between the 50 and 61.8 Fibonacci retracement levels. Now, I did go back and say this was the largest drop in history when we're looking at gold. If you look at the range today, the range of gold was a total of 297-ish points. If you look at just the body of the candle from the open to the close, we're looking at about 234 points. Now, the last time that we came close to that was going all the way back to 2013, where gold had a little bit of a hard time out here. And if we go back and look at that time, you can see right here, yes, on a percentage basis, gold went down more. However, not on a point basis. This drop right here was only 126 points. I say only, that still represented an 8.5 point drop out here in gold. Now, let's not forget, right now we are in earnings seasons, and before the bell, we had some earnings come out. We take a look at Coca-Cola, a big, massive gap on the way up. Coca-Cola up 4% on the session. We take a look at 3M, big rocket ship on the way up as well, up 7.66%. However, after the bell, it might not be so good. 2 of the stocks I really wanted to watch after the bell, Texas Instruments and Netflix. When we come over and look at Netflix after the bell, we have a little bit of problem out there. Netflix after hours is down almost 6%. You can see that massive, nasty down candle that we've had. Now, if we look out here on the daily chart, it really doesn't look like that much from today, but look where we're falling from. Right from a prior resistance level, and now, right now, if this gap holds, that's going to put us down below this swing low right over here. And you can see we're right within this gap that was formed back on October 7th. Then we come over and look at Texas Instruments. Yikes, after the bell, down 6.3%. The real question is, are stocks in trouble? We look at the economic calendar. We had no major news today. Tomorrow, we have no major news. So if you're sick and tired of the market just going back and forth, well, there could be a little bit more of that to be had. Now, we come over and look at the volatility index. Once again, the VIX was down. Now, keep in mind, on Friday, the VIX was down more than 10%, which implied that yesterday or today was going to be a down day in the market. And when we look at the S&P, it just barely closed in the green. However, yesterday, the VIX was also down more than 10%, which also implied that either today or tomorrow was likely going to be a down day in the market. Now today, the Dow Jones was able to run and make another new all-time high, but now we have a little bit of a problem. If we go ahead and we just map out the previous all-time high, do you guys see the problem? Today, what do? We spiked above it. However, price was not able to hold above that price point. So is this a very simple look above failure? And now we're going to see the Dow come down and start filling that gap that was left behind from Monday. If we come over and look at the SPY real quick, SPY today, basically a doji candle. We wicked a little bit above yesterday's high, but a very, very tight range, which yesterday I told you guys expect a potential D as in dog shape profile. And as you see, when we come over to the 30-minute chart, that's pretty much what we got out here today. D-shaped profile just represents consolidation in the market. But if we start breaking below this distribution area up here on the profile, we really got to watch out for a retest of gap support and maybe all the way down for the gap being filled. But let's not get ahead of ourselves too quick, because if the MACD indicator gets down towards the zero line and we're still just chopping around up at these levels, that could be nothing more than a recharge point to go ahead and push the SPY all the way back up, making new all-time highs. Now, I want to make you guys aware right now, Take Profit Trader, 40% off all their valuation accounts, 0 activation fee. Take advantage of this offer. Use the link in the description box down below. Use code epitome at checkout. Now, we come over and look at the futures markets real quick. Now, we look at the S&P 500. You see, earlier in the week, we rallied up. Now we have this consolidation. We look left, all-time high is not that far away, and we were able to take out the untested point of control at 67.89. But if we look to the right, notice we kind of have a minus development area right up in this whole area. We can encompass this whole area anywhere from 67.18 all the way up here to about 67.59. However, the area I'm most interested in is going to be 67.42. Let's not forget, we have a couple structure breakout points that needed to come back and get tested. And today, well, we tested the first one. The second one, we really need to drop below 67.50 to open the door to come back and potentially test out that level. Keep in mind, if we break through there, the next area I want to pay attention to will be the high volume area at 67.13. Now, when we come over and look at the daily profiles on the 30-minute chart, notice we did not take out the point of control up here, 67.92 and a quarter. I was hoping today we'd spike up there, potentially come down. Now, we had this minus development area marked off. Today, we did not hit it, but look at the first minus development area that we talked about in yesterday's video. That's exactly where the market put the bottom in today, and then the market rejected right back out of that zone. Now, this is going to be 2 days back to back where we did not test the P point. That is very rare. Does it happen? Obviously, because today we saw it happen in the ES. Now, in the event that we start breaking below this distribution area of the profile, watch out. I want to see, can we run down towards the minus development area and the structure breakout point right over here that still needs to come back and get tested. Price point being 67.42 and a quarter down here to about 67.34. Now, if we stay below value low, which is right here, right around 67.71.50, then that's going to give me more confidence to look for the market to come down, retest the lows from today, and then work its way down towards the minus development area. Now, I want to warn you guys, when we get a D-shaped profile, it's quite common to see the first way we break end up being nothing more than a trap. So if we do break down here first, watch out. That could actually provide some type of buying opportunity to go ahead and send the market right back up to all-time highs. So in all reality, if you're looking for the market to have a much deeper correction, you probably prefer to see the tops being broken out first, look above failure, and then have the markets come down and start going a bit lower. Now we come over, look at the dollar index today. Dollar index, nice, strong move on the way up 0.38%. But more importantly than the dollar index, what are the yields doing out here today? Thankfully for the bulls, the yields were down. If we saw the yields spiking today, that would be problematic, and we probably see stocks substantially lower. Now, as we come over and look at the QQQs real quick, notice basically has a doji-ish looking candle, wick on the top, wick on the bottom, and kind of a very small candle body. Keep in mind, we are right there near all-time highs. And I really thought this morning when we saw the Dow making new all-time highs that the VIX would probably follow suit as well. However, that was not the case. We come down and look at the MACD indicator. It's just about to cross to the upside. However, it has not crossed yet. On the 4-hour chart, not a whole lot to see there. Up here at these highs, you can see we clearly have MACD divergence. Look at the peak in the MACD indicator versus where it was right up here, all-time highs. And even the all-time high was diverging from over here. So again, another sign of weakness, but does not necessarily mean the markets will come cratering lower tomorrow. Now, when we look at the volume profile, notice we had the D as in dog shaped profile. And as I'm looking at this, notice I said, if we break below this distribution area, watch out for the lower third of the range to come back and get tested yesterday. And that's exactly where the market bottomed out here today. Now, in the event we start breaking value area low out here tomorrow and the low from today, I want to turn my attentions right down here near gap support at about 607.14. We breached that level. I'm looking all the way down here for the gap to be filled, 603.85. Then as we come over and look at the Nasdaq futures, notice we've come right up into this all-time high zone. Candle bodies to the candle wick. We came into it, boom, small little pullback. We came back up to again, boom, little pullback. And now the question is this going to be nothing more than kind of a little bull flag pattern that's going to resolve itself to the upside? And we see the market's just running on up. Notice we still have not come back to test the structural breakout point somewhere around 25,178. If we break below that, that's going to open the door, watching the market come down towards value area high and possibly the untested point of control, 24,918. Then I'd want to turn my attentions towards the high volume node at 24,835. Now, other than earnings that we have out this week, what are other catalysts? Tomorrow after the bell, we do have Tesla, we have IBM, then we have Intel on Thursday, we have Ford, we have Procter & Gamble, we have AutoNation, we have Dow. We have a lot of stocks that still report earnings, but the big day this week is really going to come down to Friday. We're going to get the CPI data coming out, and will it show that inflation is still rocking and rolling? Now, we come over real quick. We look at the 30-minute chart for the Nasdaq futures. What do we have right here? Well, unlike the S&P, we were able to come out and test the P point. Now, when we look at this, we're closing right near value area low, just below it at this moment, 25,256. As long as we stay below it, I want to look for the market to continue to go lower. One of the areas I want to look for is this minus development area, along with this structure breakout zone. So let's go ahead and highlight the area real quick. Candle body right up here to the minus development area. That zone, 25,162 to about 25,134. Keep in mind, if things get ugly later on this week, we still have an untested point of control down here at 24,752. One thing to note though, with the markets being so close to all-time highs, I kind of think it's foolish to think that at some point, at least intraday, we don't spike the high before coming down and testing some of these lower price points. Now, if you guys would like to learn how to get these volume profiles on your NinjaTrader platform for absolutely free using NinjaTrader Prop, make sure to watch this next video right here.